Coming up today, the S&P hits another record. Tesla gets slammed. The market's reaction to Google earnings. Trump pays Jay Powell a visit. Will we see an EU deal? And all the hottest meme stocks right now you need to be paying attention to. You're going to enjoy this one, guys. Let's go. What's up, guys? Welcome back. I got a good one for you today. And before I get into all the hottest meme stocks and what else is moving out there today, first, let's just take a look at some of the biggest stocks in the market, as we just had earnings from Alphabet, Google last night, along with Tesla getting sold off pretty sharply here today. And it was actually mega cap tech doing the heavy lifting there today, helping to push the S&P and the Nasdaq slightly into positive territory, while most stocks actually came off a bit. With the biggest one most people talking about, the always interesting Tesla, as once again deliveries of electric vehicles are down year over year, causing automotive revenue to fall 16%. And not only has there been a little bit of brand backlash for Musk's involvement in politics, there's also been fierce competition coming out of China with cheap EVs. And Musk himself pointed to weak quarters ahead. And there's a look at Tesla's quarterly revenues by segment. We can see on EVs, it's actually flatlined for a bit, whilst services and energy generation and storage has grown much more significantly. But those segments too were a little soft this last quarter. And so the bulls really need to see positive momentum with robo-taxis and then robots. How quickly can they remove the human safety officers from the robo-taxis? Will they have any safety incidents? And how quickly can they roll out and actually scale the business up across the country that has recently launched Tesla diners, for which Musk thinks optimist bots will be serving food and drink at them hopefully next year. And so no doubt what's around the corner is definitely exciting. Two of the biggest new product categories for the company and the whole market in years. And this is winning over long-term bulls, which had been criticizing Musk's involvement in politics, like Dan Ives, who said he would be a buyer on any Tesla weakness. He's a big believer in the AI story, an underappreciated part of Tesla, as most of the focus is still on electric vehicles, but the company is morphing into much more than EVs. It's still just very early days. And so we very well could be in for a period of bit more consolidation, as the current business is under a little pressure, but what's around the corner certainly has a lot of potential, and that could cause the stock to bump around a bit until we get a clear trend and confirmation that robo-taxis will be scaled up as planned. Just moving on to the other big company earnings we got last night, Alphabet, Google, coming through with really good beats. Had been a narrative in the market this year that GPT's eating Google search because of GPT's huge growth. But unbelievably, Google search and advertising revenue still growing in low double digits. So their golden goose is still well and alive, and that can help to finance their bigger ambitions in AI. And there's a look at their quarterly growth from search engine ad revenue, which looks pretty steady and stable there to me. But it's not just search where they dominate. When you're an Alphabet shareholder, you're a part owner of over 30 apps and applications used by billions of users all around the world. And apart from search, Chrome, what other industry they dominate is in video content, with YouTube's US TV time market share accelerating this last year and a half, breaking away from Netflix, and overall a much better business model in my opinion. They don't have to create and pay for content like Netflix does. It's a much more immersive app, easier to navigate, find relevant content, and cheaper to access than Netflix. And plus, on the content creator side, there's a lot more monetization opportunities within the app compared to Netflix as well that YouTube gets a share of. And they're getting more and more into premium content. And so I wouldn't be surprised to see this number on its way to 20%. And again, I agree with Dan Ives. Alphabet's quarter and conference call comments should alleviate investor caution around the perceived risks of generative AI on the search business. These concerns are overdone with Alphabet validating its ability to navigate this period of transition, doubling down on AI CapEx's bullish $225 price target. And there's a look at the market's reaction to Alphabet Google's earnings today. We did gap up to 197 a share, but was met with a little bit of selling. Still finished the day up slightly, 192 a share. The market may have very well seen this coming as we ripped up to start the week. Now a little technically stretched in the short term. You can see my reversal signals indicator firing off, but I've got a feeling we could see a similar pattern, pretty much exactly the same we got from Nvidia with their earnings. Stock gapped up and sold off in a bit of a muted reaction, then kind of just drifted sideways, only making shallow dips. And that's one way to tell when there's demand in the market, because it did break out soon to all-time highs and kept on kind of grinding higher, where it's recently still consolidating pretty much at all-time highs here. And so I suspect any dips on Alphabet, Google will likely get bought as well, barring any sharp sell-off in the market. And I wouldn't be surprised to see this take out all-time highs above 207 a share in the next couple of weeks as well. And I was fortunate enough to make a profit on Google's earnings today with an options trade that I share with my members when I opened it on Friday, closing it today for a $600 profit. And I'm proud to say say since starting the Market Makers Kit options trading service. 2 months ago, between the premium that I've written and closed trades, I've booked over $6,000 in profits in all the trades that I've shared in real time with members, with screenshots of my trade fills straight from my brokerage account every day in our chat room. And if you want to join the Market Makers Kit and get all 30 of my custom indicators, including my new Darkpool indicator, then click the link below this video and use code JUL25 to lock in your 25% discount. And it'll be interesting to see Apple's earnings next week. Stock's been coiling up, still well off highs compared to other mega cap tech. And they're under pressure as well to deliver on the AI front. And I think they'd be really wise to announce a big acquisition, maybe a Perplexity or someone else, on the day of earnings or the day before. And that will likely get the market excited and alleviate those fears that Apple's going to get left behind in the AI race, as well as they don't really have any in-house technology. They're just a powerful consumer brand. And just looking at other earnings we got out there today, largely a sea of green once again. Did get a bit of a miss there in Intel, with the stock coming off a little bit after hours, 2160, as they're still in the midst of their turnaround. But they did beat on revenue. They're just struggling with positive cash flow here. But the rest of the market giving us a whole bunch of beats. Another good sign. Earnings is tracking well. What's also tracking well is the growing appetite for risk. Looking at the increase over the last couple of years in leveraged ETFs and 0 day to expiry option volume. No doubt the market's been somewhat gamified, but overall I think that's a great thing. As more financial products, more participants, more volumes, more information, it all adds up to more liquid and efficient markets. With assets being priced more efficiently, capital being able to raise more easily and allocated to where it's most needed, along with attracting premium valuations, which gives America and its companies a material advantage. And a big part of that is us retail traders, not just in America, but all around the world. Whether you're in Canada, England, Germany, Singapore, Australia, millions of us trade US stocks every day, and we're currently doing so at record pace, with the cumulative net retail purchases coming in at 155 billion in the first half of this year, just taking out the record from 2022, and I think this could grow a lot in the next couple of years. And what a lot of us retail traders love to do is find small, low-priced, beaten down stocks of famous brands that have a lot of potential to turn around and modernize themselves. And we can actually help them do that by bumping up their stock prices, allowing them to sell more shares on the market and replenish their balance sheets, in addition to restoring confidence. With some hot ones of late, Open Door and Krispy Kreme donuts attracting massive volumes, along with huge rallies, squeezing hedge funds that are short, also causing options market makers to have to buy the stock at record clip as well, hedging all the call options they're selling retail trading. With the latest one today being American Eagle Outfitters, a long-time apparel retailer. Across America, shares have been beaten down for years, and in a dramatic change of marketing, going from woke to featuring culture icon Sydney Sweeney in a new ad, for which retail traders have given their mark of approval. And here's a look at the ad, which has gone viral. Obviously, no doubt it's been created to draw attention and restore confidence in this old brand, for which other brands have seen success featuring her as well. Dr. Squatch teamed up with Sydney to create a body wash, natural real soap, and apparently it worked out well because Unilever bought them out for $1.5 billion. And I think it also is a sign of the times that we've passed peak wokeism, as it was only 4 years ago these same companies were instead celebrating obesity. Now they're going back to what worked well in the 90s. And from that, we're getting some great memes. Crowd of people flocking to it instead of the Intelligent Investor book, and now United Health with shares getting slammed in the market, potentially looking to partner with Sydney, which of course is just a joke, but it would probably work if they did it. As this latest viral ad campaign with American Eagle helped propel them to number 6 on the leaderboard of the most discussed stocks on the Wall Street Bets subreddit, popular social media website where a lot of retail traders hang out. Of course, Open Door's still number 1, along with familiar favorites, but other hot meme stocks at the moment: Rocket, Clover Health, there's Krispy Kreme and Coles, Fubu, AST Space Mobile, BlackBerry, SoundHound AI, Webull, Wendy's, and so on. A bunch of these smaller stocks, many of them which have been slammed down the last couple of years, really starting to wake up of late. And there's a look at American Eagle, gapping up big there today. Did sell off a little bit in the regular session, still up over 4%. And this is actually a pretty interesting setup on this stock. When I took a look at it, just zooming out to the monthly chart here, it's got a pretty consistent pattern and unbelievably wide trading range over the last 20 years. Pretty much gone sideways, but over the last 17 years, every time it's come down to low double digits, it's found support. And I'll just increase the scale here so we can see that better. Along with my reversal signals indicator, pretty much nailing every single turn, top and bottom. And so I've just got two reversal signals the last couple of months. It's perked up here on this ad campaign. And just looking at my stock fair value indicator, it thinks fair value is at $20 a share, suggesting it has almost 100% upside because it is pretty cheap. Got a dividend yield over 4% as well. Market cap not even $2 billion. And I can see they still did over $5 billion in sales last year. So the company's probably going to hang around. And if they can reinvigorate their brand by bringing on a cultural icon instead of alienating a lot of their customers with woke messaging, just maybe retail investors will keep jumping on board and they can get back to even a normal market valuation, which should bring them back to $20 a share potentially over the coming months. And just looking at my new Darkpool percentage indicator, it just so happened one of the biggest readings we've got over the last little while was 3 days ago on the 22nd of July here at 31%, which is this day right here. Maybe someone knew about that ad campaign and what it could do for retail traders' interest in this stock, which has also grown a bit today, but still nowhere near levels of other hot stocks out there. And just looking at a list of other stocks that have been getting signs of high Darkpool buying of lately. I've just done a scan here using my indicator and the new Pine screener. With a few sticking out, Airship AI Holdings, BlackBerry, former really hot meme stock. In fact, we go out to a weekly chart on it. We can see it did get crazy there back in 21. And they actually just came through with a profitable quarter. So unlike many meme stocks, this one has actually gone profitable again. And again, an old brand that could still have power to turn around. Critical Metals Corp, involved in rare earths, already getting a lot of retail interest. Hot FinTech Dave, also showing some Darkpool buying of late, and Intuitive Machines as well, potentially looking primed for a breakout here on the chart. And one stock showing a lot of interest coming from Darkpool buyers, Pegasystems, as it just broke out yesterday after coiling up for over a month, but we can see my indicator was giving us signals there could be some big time accumulation going on underneath the surface. And so if you'd like to get access to this indicator today, click the link below this video and you can save 25% on all 30 of my indicators. And if you also want to get access to my options trading chat room, then get the Market Makers kit, which also includes access to all my indicators. Just moving on, we saw Trump visit the Fed, first time a US president has done so in a long time, as he is interested to know how their renovations have blown out and become so controversial, $2.5 billion price tag. And this comes on the back of his relentless pressure on Jay Powell to lower the rates, making it clear that he disagrees with the cost of the Fed renovations. And we can see from this photo here, Powell looking a little perplexed by a piece of paper handed to him for what I was actually able to get a copy of. And here it is, 50 basis points or El Salvador. Just joking, guys, but I'm pretty sure that's how Trump feels anyway, along with many others calling for his resignation. And maybe even the bond market starting to price it in with the steepening yield curve. Short-term bond yields going down, long-term bond yields going up, maybe pricing lower rates are coming and compensating for inflation risk on the long end, and the pressure just continually getting dialed up from all corners of the admin. Scott Bessent saying the Fed forecasts are politically biased, and this comes on the back of Bessent calling for a complete review and overhaul of how the Fed operate, including looking at their mistakes made over the years. For which I agree with. I think Jay Powell should do the honorable thing and step down as Fed chair, whilst also acknowledging his mistakes, namely massive quantitative easing, printing trillions of dollars, causing structural inflation, and significantly widening the gap between the rich and the working poor. That way he can leave with a clean conscience, just as Alan Greenspan, famous central banker, and one of the longest serving Fed chairs from 87 to 2006, famous for kicking off what's known as the Fed put on the 19th of October 87, Black Monday, stepped in to help the market. He admitted he got it wrong, and big time, helping to contribute to the global financial crisis. He was way too relaxed on regulating banks and thought that the free market would take care of it all. But many banks were levered to the gills, some 30 to 1, along with risky mortgage lending, which brought the global financial system to its knees, causing the government to come out with their controversial TARP package, $750 billion, a huge amount back then and still today. They had to pump in the system. But Alan Greenspan, widely respected, acknowledged his shortcomings and took responsibility, for which the late Charlie Munger, Warren Buffett's number 2 man, said he's a hero for doing so, and most wouldn't admit their mistakes. And so I think Jay Powell should as well. And ideally resign sometime next month after we get a US-European trade deal, which should further calm markets. And with the VIX already low, hitting a 15 handle would be a good time for him to get out and before the Fed meets again in September. Because if he doesn't cut in September, I think he has hell coming his way, which he probably knows. And I think he may be getting personally tired of all the attacks and call for him to be investigated. But we're still waiting on the US-Euro trade deal. Some saying the European Union may retaliate, which would be a surprise. I think we're most likely going to get a 15% tariff, just like we saw with Japan yesterday, which did see a significant bump up in the Euro stock Stocks 50 ETF yesterday, up over 2%. Market seems to be pricing it in as a done deal. Same with the currency markets as well. Euro dollar not looking too worried, and the Euro 10-year yield actually holding firm at 270. Moving on, we've got more of these weekly pay ETFs that use option trading strategies to generate regular income, paid out weekly, now on popular stocks, AMD, Broadcom, Google, Microsoft, and MicroStrategy. And just looking at some of the popular ones of late, the YieldMax Coin Option Income Strategy ETF. Got a dividend yield over 112%. It's been attracting a lot of volume of late. And just looking at the underlying Coinbase, has been looking a little stretched here going into earnings next week, along with Robinhood. Next week will be a big one. Apple, Microsoft, Amazon, these other hot stocks. And just moving on, looking at Ethereum, the largest ETF, now got officially 10 billion assets under management. Like I've been suggesting, the dips were likely to be shallow and bought up, and we very well could be walking the line here. Pushing up again today on big volume as the underlying crypto looks primed to test that key psychological 4,000 level over the coming days. And just looking at the most active sectors out there today, a bit of a pullback in global jets, off by more than 4%, and a bit of a pullback there in home builders as well. And the leveraged home builders ETF, ticker symbol NAIL. I've got this on my watch list to look for potential options trades tomorrow and into next week, as we've been getting some pretty good signs of accumulation of late. Could be setting up for a buy the dip opportunity, just as healthcare did to start off this week with the leveraged ETF Cure having a nice bounce there. And just wrapping it up, looking at the VIX here, actually got down to a 14 handle today, 14.95, as volatility's been sucked out of this market. Hasn't been confirmed by the VVIX index. Volatility of volatility, that's the price of VIX index options, and we can see the skew index climbing as well, the price of out of money put options, which typically rises and peaks out before the market sells off, and that comes down once we do get the dip. And the overall setup still looking quite bullish. Just looking at the sector trends table indicator, see a green out there. Markets are uptrending, risk on mode, green wave, and seemingly doesn't care about any risk factors. August 1 trade deadline, Fed meeting next week, Jay Powell, jobs report next Friday, Q2 earnings season, all seems to be discounted as being fine. So we'll see what the last trading day of this week brings us tomorrow. Make sure you come back to Click Capital, I'll break it all down for you. And if you're interested in supporting this channel and getting access to any of my premium trading services and tools, now's a great time to do so and lock in a permanent 25% discount by using code JUL25 at checkout, and you can get access to my brand new indicators, the Darkpool percentage and retail interest index, along with joining my options trading chat room with the market makers kit if you wish. That's all for today. Thanks very much for watching, and I hope to see you back here again this time tomorrow. Cheers.